During our mid-year review, we took a look at all of our stocks in our portfolio, and one company that didn't really do a whole lot was Qualcomm. I think it was up 8% year to date, which is pales in comparison to the rest of the portfolio. And as you know, we've talked a lot about Qualcomm here at Chip Stock Investor. They are a very prominent fabless chip designer. They have a huge IP and patent portfolio. And so it is one of the largest players in the industry. In this video, we're going to talk about what Qualcomm is doing to help change the market's perception of what their goal is, and who knows, maybe it'll help with their performance. Let's talk about it.
And as a reminder, remember to check us out at chipstockinvestor.com. This video is actually a continuation of a video we did on a live event a couple weeks ago, as well as a series of articles where we've talked about Qualcomm and, even though it's underperformed, why we are ultimately just leaving it alone in the portfolio as part of a diversified basket of stocks. Check it out, Semi Insider. We have a growing number of tools for investors to help you cut through the noise when it comes to investing in high tech. New stuff coming out later this summer. See you over there.
chipstockinvestor.com. And while you're at it, make sure you hit the subscribe button here on YouTube so you don't miss a video. So recently, Qualcomm held an investor day, and they announced a notable acquisition, which we're going to cover as well. But this acquisition and this investor day helps kind of flesh out what they're planning on doing.
This is an update to the investor day they had 2 years ago in 2024. And one of the big pushes Qualcomm was making at that time was integrating a number of acquisitions they made to make a bigger push into the automotive market as well as industrial IoT, which is kind of the old buzzword from the 2010s for what we're now calling edge AI and robotics.
That's way sexier.
Way cooler. It's 2026. Let's just go with edge AI and robotics. Way better than industrial IoT.
Way better.
But even edge AI is really not that cool right now. Where's the money really getting made? Yep, you guessed it. AI data centers. Even Qualcomm is now an AI data center company.
So here's a comparison chart from their investor day back in 2024, where they had no data center revenue. And then on the right, their 2026 investor day update, where they are expecting by 2029, $15 billion in annual revenue from AI data centers.
And notably, just to point this out, the automotive segment really has done even better than the pretty lofty goals they had set for themselves in 2024. I think that's worth mentioning again. But yeah, data center revenue expected to quickly far surpass even that in a much shorter period of time.
And this is important to think back to that acquisition they made of AlphaWave Semiconductor, which is also an intellectual property company. And we discussed that late last year. That was significant because Qualcomm specializes in ARM-based processors, which allows them to extend their reach beyond just mobile and IoT or edge cases, and that includes in the data centers.
Yeah, so the AlphaWave IP helped them round out that portfolio, especially in the very critical portion of the data center, networking, making sure the data can move fast enough in between different parts of the data center and especially the different processors. And so Qualcomm, because of these acquisitions and some development work, they think the couple hyperscaler customers they've lined up is going to lead to that $15 billion in revenue within a few years, which is a pretty sizable increase in revenue for Qualcomm, almost at this point a rounding error for the hyperscalers. This very much could be just R&D work, testing, and validation for some of the hyperscaler customers, not like a full-blown deployment, and it's still pretty meaningful for Qualcomm. Now, that said, Qualcomm said this is going to be a very profitable revenue line for them, so it's probably more than just R&D and validation, but you get the idea. When we're talking about potentially $1 trillion in hyperscaler capex next year, $15 billion is a very small fraction of the total addressable market. Casey, we've got more three-dimensional chip architectures going on here. Is this like IBM's NanoStack?
I don't think so, Nick. This is packaging. If you haven't caught it yet, check out our video on IBM and their 3D technology.
My prediction is more than half of you that regularly watch the videos were like, oh my God, IBM, pass. But the stock has been hot. Maybe not. Maybe I'm wrong.
But go back and watch it, seriously. we talk about a different 3D architecture. This is 3D stacked silicon architecture that is attempting to solve AI data movement bottlenecks.
Via advanced packaging.
I was trying to build it up there.
But this is interesting, though, because essentially what they think that they are going to be able to do, which is going to be a new use case and new revenue for the advanced packaging semiconductor equipment companies, is they're going to stick the compute die, the compute chiplet, underneath a memory chiplet, specifically DRAM. And what we're talking about here, since they're going to be sidestepping the need for high bandwidth memory, this is an AI inference use case, not AI training of large language models or something similar. And so given the memory shortage of 2026, skyrocketing prices for those memory chips, a solution like this from Qualcomm, if they can pull it off, if it works, that would obviously hold a lot of appeal for the hyperscalers, because the name of the game for them is going to be not just acquiring as much compute as possible, but also controlling their operating expenses over the long term. Is going to be controlling their upfront CapEx and their long-term operating expenses of that compute. So Qualcomm has a foot in the door.
Let's take a look at those projected metrics one more time. Revenue targets on the left, and then the operating margin for their two segments that they report in, QCT and QTL, on the right. Under revenue targets, non-handsets going to be $40 billion. That's the revenue target, which includes automotive, IoT, and data center. And then of note, their Android handset growth over the next few years is pegged to be about 5% CAGR, which is a slowdown.
Yeah, it is a sizable slowdown from years past. That obviously is going to incorporate the expected wind down of the relationship with Apple. No surprise there. So what does that business look like right now? Here is Qualcomm's total revenue through the quarter that just ended at the end of March. And about 57% of their revenue is from QCT smartphone segment in particular. So let's call it 26 billion of Qualcomm's revenue today is tied to QCT handsets or smartphones. And if they grow at about a 5% CAGR over the next 3 years, that puts them at maybe about 29 to 30 billion in revenue by fiscal 2029. So the additional 15 billion from data centers plus automotive plus industrial IoT, aka robots, you can see how this is suddenly a pretty significant spurt of growth Qualcomm is expecting, even though they are losing revenue from Apple parting ways with them. So potentially a pretty big deal. And this is why, even though Qualcomm stock has been a pretty egregious underperformer the last few years, the stock has shown signs of heating back up on this news, as it appears the financial implications could be quite significant for them.
Let's focus on this acquisition that Qualcomm announced of Modular. This is an AI native platform, and it is designed to compete with NVIDIA's CUDA. It's a software architecture.
Yeah, Broadcom also has a big software segment. So Qualcomm also kind of getting into the infrastructure software game as well. And the way this sort of competes with CUDA is Modular is designed to basically seamlessly integrate all the different hardware architectures and parts and pieces and different vendors a hyperscaler or neocloud might have operating within its ecosystem and make it all interoperable. So just like CUDA allows all NVIDIA hardware to be interoperable, this is almost like the Android version of that in a way. Crude analogy, but that's sort of how you can think of this. And that too is probably a reason why some of these hyperscalers are having these conversations with Qualcomm and potentially getting ready to commit some actual purchases to what they've been working on. The appeal of being able to make their disparate systems all interoperable is probably a compelling thought for many of these companies.
Seems important. Let's round this discussion out with a look at a reverse DCF from our research dashboard, because as we said, Qualcomm has been underperforming in as far as the stock price goes. The current stock price at the time of recording is around $190-ish. And so we ran these numbers. So here's just one scenario that could be baked into the current stock price. And I chose 100% rating on the earnings per share. I didn't use free cash flow in this scenario. I chose a 3-year growth horizon because that's what we were talking about in this investor day. They bumped it out to 2029. And so I was trying to solve for that 3-year growth horizon. Left the terminal growth rate at 5%, which could potentially be on the high side, but we'll see. And then that puts us at a growth rate currently over the next 3 years at 5%, which they indicated they would definitely reach that.
Yeah, just the handset part of their business alone, they said that would do 5%. So it could be a pretty low bar for Qualcomm. Obviously, the main problem here is the market just really can't get over the loss of the Apple business and how that's going to affect the financials. But so far, over the last few years, since we've known this was going to be a problem, Qualcomm has managed their financials more than fine, continued to grow the business, especially in automotive, and now adding data centers into the mix, potentially more robotics business down the road. That maybe is the next chapter for Qualcomm and a lot of other companies. I think this is going to just stay as a smaller position, but a value stock position in our portfolio to get us just that extra level of diversification beyond just all the high growth momentum companies that are very much in style at the moment.
We'll link the video to the discussion on IBM and their design work in 3D stacking right here. Make sure you watch it right now and hit the subscribe button before you leave. See y'all soon.